Yo, what is up, guys? It is Nick here with some raw day trading, and today is going to be a pretty good video, I think, especially for new people, newer people, or even like traders that have been doing it for a while, kind of like mid-range traders. There's a couple different types of trading, and the trading that I do is very fast paced, and it relies on market orders from Thinkorswim. And because it relies on market orders from Thinkorswim, I'm basically giving my order to them, and they have within reason pretty free range to fill how they want to fill. And also in fast moving stocks, it's a little bit harder to kind of judge, even in contested situations, whether it was a good fill or a bad fill. And whether that was really a Schwab fill or, they just sent it to the market and the market gave it whatever. It's a little bit complex. There's a little bit of nuance. They do internal matching within Schwab, then they do internal matching within their broker, which is Citadel, and then actually they have a couple various market makers that they send their orders to. And then those aggregators or whatever you want to call them, if they can't match it, they send it to the market, to the exchange, like the NASDAQ or the NYSE or whatever it's being traded on. And then I would imagine that those orders get filled the worst. So it's actually really hard to determine whether, actually impossible, because they don't give you the information. They don't want to tell you. I've talked with them for a while. They're like, oh, that's, we don't talk about that, or we don't tell you that. We can't give you that information. That's proprietary. And it's a lot to do with like they have algorithms. They fill you at good prices because they're able to match it with another order internally, and then make money that way. And so they don't have to farm it out to other people. And then they make money also by sending the information ahead of time. And because it's like everything's moving at the fastest speeds ever, there's like a whole marketplace once your order is made for information buyers of that order, matchers, and then people taking that and then going to the market and making other decisions based on like the amount of shares coming and etc. And so because it's so complex, you can't really tell if it's a good fill, if it's a bad fill. And then, this is Schwab. And then as it changes over time, as the market changes over time, as the liquidity from the traders of the platform change over time, there's a bunch of subtle little differences that, start to happen where, in different situations, you're getting filled slightly differently. And of course, it's never like a uniform stock. Each stock has a unique amount of shares available on the market. It has a unique amount of volume in the moment. It has a unique amount of, a unique set of traders each time too, who respond differently, as well as different algorithms, and market makers, and how they behave and change their algorithms over time as well, and how they adapt to different order flow. And so this week I've noticed a couple changes that have been happening. How a couple of the orders that I've sent through just haven't been handled as well as I like them to be handled. So let's look at a couple things here, and I'll see if I can give you some insight. But really, the end all be all is this is you have experience of these different situations as you trade more and more and more, and you kind of get inklings of like how many shares you can use in this situation and to get filled at an acceptable rate to you, and then your threshold, and like your threshold of like, okay, am I willing to accept a little slippage because, this has higher potential, or if you're willing to, wait for a limit order to get filled, which I don't really do. It's just, I feel like it gives too much information. And so it's a very it's just super nuanced. And a lot of this has to do with, in the moment, decision making is more like there's a lot of stuff going on. If I get a little slippage here, fine, because I have other areas to make it up in. And, earlier in the day, it actually tends to be a little bit better today because you get the whole rest of the day to kind of, make it up if you get slippage. And honestly, in the rest of the day, orders in less volatile situations are handled slightly more honestly, and I do a little bit better there. Recently, in like the high volatility in the morning, the spreads are very wide. It's moving very fast, and it's very difficult. Even as like I think a lot of traders or potential traders think, oh, it's you have a pattern, the pattern, you do the pattern. The problem is getting filled at the right spot, and then, okay, let's say you don't get filled at the right spot, you get filled higher, that adjusts your risk parameters much higher too, especially if you're trading on a shorter time frame, bigger size, you're scalping. All those things make it more higher risk. Like you're just going for a couple cents, but you get filled at the high, like above the ass, a couple cents higher, and like that was the entire move that you were going for. And so it partially is a glitch of the strategy. The other one is like a lot of times if you're trading for shorter term, you can manage your risk really well too. So it's like a give or take. So you accept some of these glitches in the strategy because nothing's perfect, because all the perfect strategies get market makered out. Or just like churned out, and it just becomes a structure of the market as traders come in and just do that all the time, and then something changes, people react differently, etc. It's a dynamic situation, very, I guess, game theory, but that's not a good way of putting it. So bringing it back to this big topic, to specifically what I was experiencing this week, we're going to go through a couple of precise examples, and then but really, to sum it all up before, the biggest problem is when this happens, the emotional reaction to it tends to be worse than the actual event itself. Having said that, I felt like I was pretty good at managing it, except it was so bad that like there were 2 days back to back where I was just miserable, like after the trading day. Absolutely miserable. I felt there was like a high amount of injustice, and I was mad, and I didn't have like profits in the beginning of the week, really. Like I made like $100 Monday and Tuesday collectively. And because it was so small, the losses, they were within range. They were before my actual stop outs I left. But I just felt like they were such bad beats, and it just hurt so bad that I carried that emotion later on in the day. There were a couple other things going on personally, but that I actually did really well at keeping it locked down, in my head at least, and still trading precise. We're actually going to go through a couple of these, and maybe we'll see some examples of where maybe I was a little bit reactive or too reactive afterwards, of these entries, etc. So first entry, and that's the main thing. Like you get a bad beat, whether it's in poker or it's in trading, you really have to maintain your composure, because the reaction after the bad beat is what determines winners and losers. And so the worst of my bad beats wasn't that bad. I really only lost like $100, but it was early in the day. It was after being down 800 on the week already and being tight on money, to be honest. Just because this is my only source of income. It's been a little bit of a slower year. I'm not in a drawdown really, like aside from this week, but It's just the opportunities, because everything's always changing. I haven't quite tuned into the opportunities that I should be tuning into a little bit. So that is like, there's a sense where it's like, I want to feel like I have it. I want to feel like I'm, in the flow and able to like trade with competence. But the reality is the market shifting, and always. And there's like, it's like castles made of sand. It's like you have a volatility pattern as like a small cap trader, or as like a fast, quick scalper. And that castle, it's a sand castle basically. Like the tide changes and the sand castle goes away, and then you have to build another sand castle, and then another sand castle. And there's various reasons. Like I was saying before, a lot of times you can keep your risks so tight. Like I generally don't like my worst times are basically break even, more or less. Like I generally don't have a strategy where like I have to take these huge losses to realize these huge gains, because all those huge losses are really within the day, and there's multiple opportunities, and most of the times they balance out. And when they don't balance out, like I get so puckered in the butthole that I just stop trading, and I just go very small. I cut my risk down, and that has hurt me a lot, honestly, like in long-term potential. But that's how I've, managed to do it. But it's a very high, like the cost of this strategy is very high attention, and very, very much work and review and understanding what is going on and what is the current theme, and always, 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 always adapting. And every time that, it's summer, it's Los Angeles, I want to go, live my life and like have a little bit of a life, a little later into the day. Every time I try to like not sleep as much, go hang out with friends more, go, talk to girls more, whatever. Every time I do that, my trading just doesn't progress, and it's okay. Like it is what it is. I'm a mental athlete, basically, trading like this. And if I don't, perform, I just have mediocre results. And really, this is probably comparable to, maybe like a shitty fighter. You make whatever, 50K a year, 30K a year. Being a shitty fighter, you might have to have a second job. But it's me doing my stint as for whatever professional career this is, as a shitty fighter. Anyways, let's get to what happened here. So there was some wild shit going on. DTIC didn't really trade it. The spreads on that were massive. Like the obvious spreads were massive. Like you see it here, it looks tight, but look at it as it's down here. You're getting spreads. I think one time it was like 90 by 83 cents, 90 cents by 83 cents. Yeah, right there. That's, I don't even know what percentage spread that is. That's like so what was that, 90 by 83? Oh, 7 divided by, let's divide it by the base, I guess. So that's 8% spread is wild. Like, how are you supposed to size into that? That is just ridiculous. 8% spread is a lot. And so, it's only 86 cents, but like, how much do you want to lose is the question. This thing moves and it already tested, whatever. I traded it later in the day, lost plenty of stop outs on it. I don't know, I was down like $83 on it, whatever. But the real move happens over here. where we buy goes into this halt up or tests the halt up band, and I'm like, huh, this looks interesting. And notice, I am not buying at the high here. I am being very patient. It's, I haven't really traded anything yet. This is going to be my first trade. Also, I recognize this is a risky stock. If you look at the daily chart, which I don't have up because my platform is not open and I don't have it on my thing, the daily chart spikes up and then just fails. It's very volatile. It was a huge percentage mover, and so I know it's volatile. So because I know it's volatile, I only have 500. So because I know it's volatile, I only have 500 shares queued up, and I'm very patient. So let's look at how much value dollar amount value is in the stock. We'll go $8 at the moment. Times 500 equals, okay, it's only a $4,000 position. Granted, $4,000 is, it's at the midpoint basically of what I'm comfortable with on volatile names, and that's fine. If I were to get filled at the prices I thought I was getting filled at, I would have been okay with the volatility. But now, let's watch it. So I'm here. I wait for this candle to close, making sure it's not a total rejection. I'm like, all right, let's see what happens here. So I'm like, yeah, it looks interesting. There's a lot of stuff going on. Big flush here. Okay, so you see this here. The ask is at 47. The bid is at 46. My hand's clicking the button right now. It's not releasing it, but it's clicking it. It hits the button, and I get filled 15 cents higher. Maybe 17. I don't know. I was looking at 47. I was thinking maybe I'll get filled into 50. This order pushes the market up. And let me see if I can find my... So where do I get filled at? It actually doesn't fill yet. To be fair, it looks like there are traders down here and they're buying. Someone gets filled at 72. Someone gets filled at 67. And they jumped in before me. That is fair. But, it was really there for a second. I thought I was getting filled nicely there, but no. So, honestly, it could be lag. But it would have to be lag both on the chart and on the level 2, which are both different platforms. This is DOS. This is Thinkorswim. Even on the dude, my 500 shares is queued in right there. And these guys get in before me. So I wasn't buying on the flush. I did not have the wherewithal to buy on the flush, but I bought on the hesitation, which is a mistake in this situation, apparently, looking back. Okay. So we buy lesson. Let's just go through, write some notes here. So we buy high fill lesson, or WBUY. Sorry. I bought on the hesitation, not the drop. Okay. You would think maybe you get filled 5 cents higher on that, but no. I guess nobody wants to short right there. Maybe that's a thing. So it fills me there, and then immediately is in the 30s, and I'm like, I don't cut it immediately either. That's a problem. Okay. If I cut it immediately, I might have gotten filled slightly higher. Who knows? But that probably 1 second of hesitation, the stock was down to in the 30s, and I'm like, ugh. Granted, I did have a small position on it. It was early in the day, first trade. I was like, okay, fuck it. I'll watch it for a second, and then I end up cutting it. Oh, it's hesitating up here. Some people are buying it. I'm like, there's some buying, and I sell into the buying. Okay. It was an okay management of the delay, and then I buy right back in. I get in at 23. It's not bouncing immediately. The spread is wide. I'm like, fucking fuck. I'm just not catching the breaks that I thought I would. And I cut it. I cut it up there. I forgot where I cut it. Yeah, it's just hesitating, and I'm just like, fuck this. I'm out. Okay. So it actually does end up going back to where, pretty much exactly where I wanted it. Let's see what else happens here. It taps 7. That's me taking a photo of it. Hmm. And then I think I just leave it from there. I don't think I trade it anymore. I was very irritated with it. Bounced away. Yeah. Okay. So that was that. It was only $100 loss, but here's where the real mistake comes in. I mean, one is like having shitty tools, which is it's a long-term mistake. It's hard to fix. It's like how much do I want to pay for commissions? Do I have the capability like to wake up early to do pre-market? Like, do I need like a good broker? Do I just don't feel comfortable having a good broker. But anyways, all that aside, we have Vero. Vero has this massive drop. I mean, real massive drop. It's down to the 73, 74. I buy a little bit late as it looks like it's bouncing. I don't buy the lows. Okay, that's a mistake. It's a mistake. But it would have also been a mistake to buy that at the lows too. So the mistake was that I bought that huge amount of a flush. Even if it were to have bounced up, I don't know. What like it dips below? Cool. Do I get it below? No, I get it just above. So really the spot to buy it would be below 75, but it'd be a high risk of a halt down. Well, not really. It's at 329. I mean, that'd be a vicious halt down. That'd be not saying it's impossible, but these have been known to do stuff like that. But this is just, it's a very high risk trade in a very short, heavy market in a very, I don't know, crazy situation. And so I buy it. I'm like, let's go. Let's go. And it's hesitating. I buy it high and it was hesitating and I didn't cut. Okay. And now I'm holding, getting stubborn, and I'm like, fuck, I'm going to have to cut this. It's not bouncing. It did a little dip below. I'm holding a little bit longer. Okay, so I cut it literally at the lows right there. But it goes lower. No, it doesn't go lower. I just actually jump back in. And then now it's pushing back up. Do I click on something else? What am I doing? Oh, and I don't take the scalp. I don't take the little bit of money there. I'm holding on. I'm very persistent with this one. I take half off. All right, so I probably could have done well on that if I had traded it um, a little bit more calmly and wasn't as reactionary. So whatever, $86, but it was originally like 150 or so that I was down, and yeah, and then this is the next entry, kind of right here, was to get back in. It does a little peak lower. Maybe cut it there, but I'm a little bit scattered. The D tick was moving up, and yeah. All right, so that was that. I don't know if there are any more examples of, yeah. Okay, yeah, actually, not from today, or not from Friday, but from the day before. I had to leave. I had literally 1 hour to trade, and my thought was, okay, can I get out in time? Get some money, get out. Well, I gave some money and I got out. So, eh. All right, Xena. I don't know what time this was. So my notes on Xena was I was getting filled poorly on it. Let's see where I get filled. Yeah, it's a little bit of a wild name. It goes all the way up. I don't take any stabs at it. Oh, there we go. I took a stab here. Ooh, I lost 250 on this. What the fuck? Where was that? Oh. Okay, so this one, now I remember this. This one was nasty. Nasty girl. Okay, so this was another example of getting really filled really badly on a dip. Okay, what happened here? This was a little bit more questionable, I think. Not terrible. It was the kind of first dip. Yeah, I didn't cut it. Should have cut it there. Should have cut it there. Should have cut it here. I cut it. I cut it at the lows. Yeah, that is interesting, right? Hmm. This was a wily stock. Okay, so that's one example of I felt like that was a bad beat because I don't know. Why did I feel like it was a bad beat? Let me see what I did one more time. I think I was just drinking coffee and distracted, and that's part of the reason. And I was frustrated that it went all the way up and I missed everything. Okay. Just not trade. So the Xena, okay, so Xena watch list. Xena action. what was the day? 6.5. Open. What was the other one? DTCK and we buy action. Okay. So yeah. All right, then rival, RV or Revile, RVYL is the next one that I jump into RVYL. So here's what happened on RVYL. I like this pattern. It's for the break of the pre-market high. Granted, it's a stronger setup and opens up in notoriously weak. We have a high sell volume candle right here. And then let's push ahead. So it breaks above this kind of double top. I go for the support. I wait for it to close. And then I go for the support. I go for the support after it closes. Okay, so it closes here. A little higher volume. Okay, it has a little uptick. I take the uptick. And then I cut it. Okay, I jump back in. It just keeps pressing down. I cut it. I shouldn't have cut. Yeah, okay, so this wasn't a Phil problem. This was a me problem. Nope. Okay, so I took the bounce back. Oh, and then it really flushed. And I cut it. Okay. I took the bounce. Keep taking upticks. So all of this is basically the upticks are getting brutalized. Cool. Good to know. Yeah, and it just keeps creeping against it. I shouldn't have taken that either. It was too much of a reversal. Too slow, too creepy. I just wasn't. I was chasing, really. I'd missed all of that area. What am I doing here? Oh, don't tell me I'm going to take a reversal. Huh. And this is where I'm reviewing. Like, a lot of it is me thinking that I had bad beats. And then, I turn back and I find that it's, not quite bad beats, but it's bad execution. Okay. Well, good to learn stuff. And then now, totally rejected below this level. Cool, not going to trade it for now. Tries to reattempt. Do I take another trade on that there? Yeah, I do. Oh my God. I wouldn't have traded that in my right mind, let alone, but I traded in my wrong mind. Come on. Wow, why am I jumping back in even after that? What am I doing? Oh my God, I took a double top there. Okay, so to be fair, that literally only flushed after it did a double top, micro double top to that level, which I bought. So it was literally exactly after that test again. And I bought that test. And so it seems like it was just hunting me, but I think it was hunting everybody that was not trading well. And I was not, I was blind to everything. I was like, this thing's going to break pre-market highs. It actually does, just not at this point. It kind of hangs out here too long. The volume is a little questionable. You know, it's holding below this level. It does double top here, and it really just flushes back on me. And then I cut that, or do I cut it? I hold it like a little, like a pica. I don't know what this pica is, but cut it there. Okay, so big mistakes on my part. And then I finally catch a win here, which actually ends up being the low, which is funny. And then, of course, I don't take it into the highs again. Because I learned better, but really gets, mashed around there. Oh, and then it goes? Look at that. Oh, I mean, yeah, I can't do, what's 11? 11 to 12, 12 to 1, 12, 1 to 2, 2 to 3, 3 to 4, 4 to 5. 6 hours of sleep just doesn't seem to be enough. 6 hours of sleep, 6 hours of sleep plus coffee, plus waking up just before the open, literally just before the open. I was up at 6, opens at 6:30. Like, I'm like, I just go take a piss, and I come and try to, go take a piss, make a coffee, try to work. It just doesn't work. So I just didn't have the wherewithal to notice the subtleties. And what happens is my brain oversimplifies. Okay, I like this rule. I need at least 1 hour between wake up and trading, preferably 1.5. So I would just miss the open in this case, and that'd be fine because the open one has been terrible, terrible. Open's been gross recently. Oh my gosh, I cannot trade 1 hour before wake up. Okay, cool. I mean, that's it's just like I'm not looking back on it logically. I don't have the regulation. Yeah, like sometimes I can't control my sleep schedule, but I can control how much time between when I wake up and trade. And I think that's an important one to control. So, okay, so let's watch this. Okay, so it starts peaking. Do I trade it here? I'm like, I'm so bruised from this stupid stock. And I'm like, fuck that. I'm trying to buy this stupid name. Yeah, good fill. That wasn't bad. I just held it. This one dipped much farther than I expected it to. It ends up going, of course. Of course, my horse. And that was kind of on me for holding, but it was a decent position. Okay. But so to answer the question, um, is Schwab Thinkorswim dead? I don't think so. I mean, I think it's fine. It's definitely a lot less advantageous on the fills recently. So, for whatever that's worth. But, like, I also remember getting roasted on fills, when it was still just not Charles Schwab. Who was it before? TD Ameritrade. They did change a few things. The market always changes. And like I was saying in the video, it's actually really hard to determine if it's the market or them, both. Algo's getting smarter, less liquidity from other traders trying to do the same thing. Traders getting smarter, traders giving up, traders changing, traders just trading differently, whatever. But it is my job to adapt to it, and I think that the consistent adaptation to is what I've been resisting. And I just have to accept that I have to consistently, one, keep in line high discipline, which is, hard to do. Okay. High discipline, it's a job. Like I like to think I just come in, make a couple $100 in 2 hours, and then go and fuck off around the rest of my day. And it looks like that. It really, really looks like that from the outside. But that couple $100 is oftentimes predicated on me reviewing what I did well and poorly that day, me watching tape of just the general market action, me sleeping enough, and then having, I think in this case, enough waking time to let my brain adjust to the world and to the nuances of it, and not trying to force the open where it's like is the most volatile. And also having enough sleep for the emotional regulation necessary to keep the good decisions going, even in the face of a bad beat like the one I showed you in the first example of the WBUY stock. So that's the lesson of the video. If you like it, thumbs up. If you don't, okay, don't watch. And I love you guys. Day trading is risky. I don't recommend this to anyone. This is just kind of it's just become my own personal crusade, and it's a very difficult thing to do. If you're a mental athlete, you kind of have to stay on all the time or just walk away. And I'm working on being better at that, understanding that I can't come in to the market kind of just replaying the same tapes in my head, the same actions that got me there before. I have to be very present with it, very, very aware of what's happening. So, and not take it personally, but work to do better. All right, you guys have a fantastic day. Great seeing you. Have a good weekend. Do your review. Watch the recordings, and I will catch you again. When will I catch you? Probably Monday afternoon. Okay, goodbye.